I mentioned also about access to capital. And so what I mean by that is this will really help you insulate yourself from some whammies. I remember when I first got started, I used a signature loan to buy the first property. I had a Discover signature loan for $35,000, and I went and bought a property in 2017 for 23,000 at an online auction. And then I had a Home Depot card, and I did all the work myself, and I made like 9 grand on that because I could only do one at a time. And the second property, I knew I had the real estate bug. I knew I was all in. And so the second property, I got a merchant loan. So I had a painting business and I was able to get unsecured loan. Everybody was loose money then. Unsecured loan for 60,000, just based on my painting business. And so I put that in, and I put some capital to spur some more growth in my painting business while I worked on did my second flip. But having access to capital can really insulate you from some big whammies. And I learned that on my third, fourth, and fifth flip is when you miscalculate the renovation, you get your back's against the wall, and you're the finances, and you're telling yourself, well, if this happens, then I'll be okay, and this will happen. What I learned through that was you need to throw more hooks in the water. Like get your projects funded, fund them properly at the beginning, have an ongoing conversation with other people for, lines of credit and access to capital. We're going to talk about partnerships a little bit, but if I talked to an investor last week, and I did a loan to him because he was $8,000 away from being able to finish his project to get it on the market, and he was just tapped out. He was totally tapped out. I mean, he was looking at just absurd options to you know leverage, and he was talking crazy stuff to go sell a kidney or something. I mean, like, what are you talking about? That's crazy. But he was tapped out, and so he told me that. I was like, well, I mean, I could do a loan on that. So just put lots of hooks in the water and always be thinking and strategizing your business to gain access to capital, because again, your projects depend on it, and they depend on good underwriting. They depend on really good solid numbers from the beginning, financial and fiscal responsibility during the project, 1,000,000,000%. But having trusted, reliable resources that can continue to fund your projects and fund your operation, and help you get projects from close to close is great. And this could be private lenders. This could be banks. Think about lines of credit. Think about private lenders. Think about friends and family. I talked a lot last week or the week before about lines of credit, and that was something that's been pretty stinking cool. A lot of people will draw the line on like a HELOC on their house, which that's totally fine. I don't want to